So most people don't think in the world of investing of counterparty risk. And it's one of your greatest dangers, especially in times of uncertainty, massive disruption, changes, environments that are pretty much chaotic. And what counterparty risk is essentially, in the world that we live in, where we have the rule of law, we have respect for private property rights, we operate with contracts. And usually there's two parties to a contract. Now, a contract is only as good as when the two parties do what they agreed that they were going to do when they entered that contract. Now, your counterparty risk is essentially if you enter into an agreement where the other party doesn't hold up their end of that contract. So essentially, what does it mean for folks out there, and how could they navigate counterparty risk? Counterparty risk is essentially, how I explain it to myself is, yes, it's pretty important of what your money is invested in, but more importantly, who is it invested with? So in 2008, 2009, there were folks that had brokerage accounts with Bear Stearns and Lehman Brothers. And I'm pretty sure there are folks that saw a massive pullback in the market and they shorted the market, and they had their brokers short the market for them. So they were right. Their strategy was right. Their tactical implementation of it was right, but it was with the wrong custodian. And that is essentially counterparty risk. There was one area that really came back to bite them. So if it was let's just say another entity, then they would have made some money. But because it was with the wrong entity at that time, essentially they lost all of their capital. So in an environment today, it's very important when you think of where is my capital and what is it invested in, and who is it with, you can navigate counterparty risk. So if you think about the four areas that I've shared that we have positioned capital in, when you think cash, who is your cash with? And then it leads to bank. How solid is the bank that your cash is currently in? How solid is that bank? That's counterparty risk. And most folks in the Western world, and especially in the United States, they cannot imagine that the bank that their money is with, their cash, is going to go under. Well, there's bail-in provisions already in the United States. It's all across all the European countries. It's in most countries all over the world, and it's there for a reason. So that's counterparty risk. So, what I do to navigate counterparty risk is I look at how institutions and entities and even people, how they've behaved in the past. Chances are very, very good that if you look at their track record of behavior that goes back a long way, the probability is very high that they're most likely going to behave similarly in the future. Now, of course, there could be a wild card, but that's one way to navigate it. So when I was looking for a position or a place to position capital and where do I keep my cash, one of the areas that I'm looking at is mutual insurance companies that have been around since the mid-1800s. They've literally survived civil wars. They survived world wars, two of them. They survived monetary resets where the global monetary system essentially changed, right? In 1913, in 1944, in 1971. And they've seen recessions, they've seen depressions, they've seen market crashes. You could look at what they did in 2008, 2009, which was one of the biggest financial crises we've ever experienced in this world. So I look at the track record of what they do in the past, and I look at a very high probability that they're probably going to behave similarly. So look at where you have positioned capital and look at who is with, and do some analysis and risk analysis on counterparty risk, because I think it's huge in the times that we're living in right now.
Yeah, super critical right now. And you mentioned whole life insurance, and we've had you here on the channel talking about whole life and the infinite banking concept. We'll go ahead and drop the links to that below. What do you think is going to happen if we start seeing a lot of defaults?
Yeah, so if it's in banks, and particularly the banking system, a lot of folks have shared that they see a lot of bail-ins this time, not necessarily a lot of bailouts. And that's a concept that a lot of people are not that familiar with, especially in the US and Canada. But Europeans are familiar with that because they saw it happening in Cyprus. So essentially what happens with a bail-in instead of a bailout, we experienced a bailout in 2008, 2009, where essentially the federal government stepped in and created a ton of currency and saved a lot of banks and a lot of financial institutions. With a bail-in, essentially how the law is written right now, when you put your capital, your cash in a bank, you become an unsecured lender essentially to that bank. So they owe you that money. So in the event of a bail-in, they can access that to recapitalize the bank. So, and of course, what happened in Cyprus was that they accessed the depositors' funds to recapitalize the bank, but they gave them shares in the bankrupt bank essentially at that time. So could something like that happen? Well, as I said, with counterparty risk, you just look at what has happened in the past to see what could potentially happen in the future. Now, that doesn't mean that that is going to happen, but that should be something that you think about, and you should have that as far as your risk analysis of your overall strategy, and do that and say, what would happen in an event such as that, where there is a bail-in? What does my capital look like? Where is my money? Do I lose a ton of money, or am I in a position where I've managed that risk appropriately and accordingly to my risk tolerance?
Yeah. Well, thanks for coming on the channel. We'd love to have you back here on again here in a couple months so we can kind of reflect on this video and see if we were right, wrong about anything. But I mean, right now, yeah, I can't wait to see what's going on. I'm excited too. I'm excited about the opportunity, guys. And that's not about us hoping bad things happen to good people, which ultimately does happen when these types of things happen. We don't want that to happen, and none of you do that's watching either, but it's going to happen regardless. Why not be prepared, and why not be prepared enough to take advantage of it when it's going to be happening anyway? So MC, always a pleasure. You bring great energy, great optimism, and tremendous knowledge here on the channel. MC, would love to have you back here on the channel. If folks do want to talk to you and they want to be positioned for the current market, the looming pending market, or really any market, the best thing they can do is reach out to you via email at ninja@vipfinancialeducation.com. Include your first, your last name, best number to reach you at, and Cashflow Ninja conversation in the subject line to have a conversation with you, correct?
Absolutely. And I look forward to having those conversations. Your viewers are great. I always have great conversations with them.
Fantastic. Well, thanks for joining us, guys. We'll see you on the next video.